What is going on? It's been a while. We're in a little bit of a long here. Not that big of a deal, but lately we've had a lot of changes. I've moved multiple times, just raising a family, doing everything. I've still been trading. It's just been harder to develop the YouTube channel. But in general, I wanted to show you guys some quick little updates. So, one of those things in particular is the way we trade now. I have since updated the way I trade and the way I view the markets. Um, because I don't have a lot of time to spend. We almost had that TP and then bounce off. Yes, we did. Might just take that. We'll see. Let it go. But small story, they might get trapped here. If these guys get trapped, it looks like they are. Maybe. We need these bidders to hold on, but if these guys get trapped, we kind of sweep the lows. This trade could be invalid, and we have to come all the way back down and catch this bidders again. But anyways, in general, I wanted to just show you kind of a simpler way of viewing the markets. It is quite simple. Have to, if you can view it the more deduced kind of simple way, it's a little bit easier to get in your right positions and feel good about them. So, for example, I just want to talk a little bit about buyers and sellers, right? So it's very simple. The market is just supply and demand, buyers and sellers. This would be like a supply. Turn that a little bit red. This would be demand. And this is pre-market, so we don't really look at pre-market as much, but this would be demand. Let me a little bit go. Supply, demand. Now, here's the thing with supply and demand. Once supply gets taken, once it gets kind of chewed up, it's gone. And if there was new supply, new demand, these zones will all behave as new areas of interest in the markets going forward, right? Notice demand. Touch this zone, and then a big buyer bought it up, right? So this is the easiest way, in my opinion, to look at the market. It can get a little complicated with boxes all over your chart, but in general, if we were just to kind of visualize where buyers have bought before, they're likely going to buy again, we can start to kind of get an understanding of where we would like to participate in the markets, right? So in general, this is a buyer right here. So what I want to quickly talk about is how much. It's kind of like watching two people play poker head to head. We don't really know who has more chips, right? We know that they're both participating, they're both playing in the hand, but we don't know who's bigger. So here was your previous supply before. Came over. Notice we touched into that supply, came back down into demand, found new buyers here, came back up into supply shoved off. So every time it got into the zone, it started selling. So I want you to visualize this for a second here. By the way, we're probably going to get trapped in this trade. I would like to take it off, but yeah, that was pretty close to our TP. So we'll just take it off real quick.
Order
So we don't have
filled.
to worry about that right now. It still could go back up, but I would have liked a clean touch. I don't like it going 3 points away from my TP and then bouncing off. That's not great. We'll just stay in a little bit of profit here. So visualize this. Let's pretend like this person had 100,000 shares they needed to sell. Okay, 100,000 shares. We're going to start this over here. This is where they were, 100,000 shares. And let's pretend like this one also had 100,000 shares. So we don't know exactly, but we're just going to pretend for right now they're even, right? So, and why do we know this? Well, because for big institutions, for hedge funds, they're not just aggressively selling or aggressively buying. Sometimes they have orders in areas where they would like to, where their deciding that it's best to offload some of their supply, or where they should start to scoop up some of their demand. Now, when I'm saying big players, this isn't just one player. It's usually accumulative. Cumulative. There we go. So accumulatively, there's like an area of interest between multiple people. Same thing with here. So with that in mind, we got to think, well, if the market goes up into this area, how is it behaving? And are we assuming that they still are as strong as they've been? So let's just pretend like it goes up here, right? We have the display up here. It comes up here and almost touches and then kind of shoves down. Now, I can get into the price action, the shape, the volume, everything like that. But for right now, let's just pretend that it hit up and we took a very small amount. It was a hot reaction. Kind of bigger orders came through. So it was 100,000. Now let's just pretend like that went to 90,000. Yeah, let's go 95,000. All right, let's just pretend it's 95,000, because with this in mind, we see the reaction that came up. Now, this is a new buyer here. Why? Look at the volume. Huge volume. Big buyer. We're going to assume that it's right here. And this is the channel. So, new buyer approach. So, now we have our seller and we have our buyer, both at the same point here. Both at the same point. So, when it tapped into this area, we could assume there was a hot reaction. It was probably, let's say there was maybe 90,000 here, right? Big bid. Dropped in, actually touched in there a little bit, scooped him back up. If we were to look at, well, level 2 or anything, we could probably see a ton of absorption right here. Not aggressive buying, just a seller getting absorbed. So now it comes back up, drifts back up, and now the buyers actually close in this zone a bit. Close in that zone a little bit. So that probably took a big chunk out of the selling. Again, hedge funds, they don't want to sell too quickly, because if they sell immediately, then it scares buyers off and they won't be able to get out of their liquidity. They have to sell 95,000 shares here. So that's what they're going to have to do. So when we came up into this pool, they might have been able to offload, we'll say like 30 grand. So they have 65,000 left. And then as it comes back down, it comes back up again. Now it touched and they got absorbed again. We'll say that that's maybe, let's put this at like 45,000. All right. So now they're at 45,000. That was this one. Touched again. Let's see if that, we'll say that that wasn't a crazy touch. We'll just say like 37.5. Now we come back into this area again. Quick touch. We'll just throw off another little bit here. Let's say 32.5. 32. And now we had this close again into this area. And again, selling off again, right? So the reaction's still decently hot. So now we're probably at like 15 with this one, right? So think about this. This buyer's sitting here. No real crazy. There's an aggressive buyer that's been scooping this up, as he's been doing all morning. This is another little buyer right here. But think about this. Buyers here. This buyer's aggressively buying the market. This isn't a passive buyer. This is an aggressive buyer looking to push up the markets. And then we have this passive seller that's just looking to offload their liquidity, right? I'm going to get rid of this for right now for simplicity's sake. So eventually we get to this point again. Tapped in again. Now what are we at here? That was a hot reaction. Let's say 7,500 maybe. And again, these numbers aren't accurate. They're just to help you understand that this is the difference between passive buyers and passive sellers, and visualizing how strong are these guys. Are they, over time, after so many touches, you can imagine that eventually they get taken over, which they did. So in general, though, that is that is what happens here. They completely get taken out entirely. And you can see that they're hanging on the back end of this little liquidity here. There's still sellers, 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 and then it just cut through officially. So in general, as a rule, I shouldn't say as a rule, but I mean say in general, now we can assume that this player is gone. They've been fully satisfied. This player here has been completely satisfied from their passive selling. And this aggressive buyer continues to take positions in the market. Now, let me put that here. Now we could assume that maybe they have 100,000, right? Anyways, the point is that this is how you can start to observe the markets just on buying and selling, who's got control, what areas you might not want to go long in immediately. You might want to see how it reacts first to see if we got gaining some strength. And this is just going to help you. Buyers and sellers over the market, aggressive and passive buyers and sellers in the market. That's key one. Key two for how I've been trading is I legit only spend 1 minute looking at the charts at 8 o'clock in the morning. I put in a couple trades, limit orders, and then I close my computer. I don't look again. And then in the afternoon, same thing. 10 o'clock comes, I put in a couple limit orders, and I walk away. I don't touch it anymore. And this is something very new, last maybe 3 weeks that we've been doing this, and it's been working very well, but we've needed to adapt because we just do not have the time to be sitting in front of the charts all morning long. And to be honest with you, the mental capital, that's what's tough, is the mental capital. So let's have another look. Volume profile. This is what I do. I'm going to show you guys exactly what I do in the mornings. First thing I do is I'll come to the 5-minute chart and I'll go to New York high, which is 2100 down here because I'm on the West Coast. 2100. I could set it to New York, but I'm too lazy. 2100. This is whatever the low is after that, but before market open, which is at 6:30, is the low. The low. Here's the high. Well, I think actually, let me see. 620, 625, 630. This is the high right here. So now we have our pre-market low, pre-market high. If you guys have seen my last videos, you know that I really like to structure my trades in the pre-market low, pre-market high. So our pre-market low zone and the high is done. Let's do our next thing. Now I'll take a fixed range volume profile. It's told right here, fixed range volume profile. And I'll draw it from 630, right here, this candle right here. This is a 30-second chart, by the way. I'm going to talk about that in a second. To 8 o'clock. Now, why am I doing a 30-second chart? That seems ridiculous, right? Well, if we were to do a 30-second, if we were to do a fixed range volume profile in the 5-minute, I want you to see the difference in detail. Look at that. Look at this detail. Now look at this detail. This is like looking at it in 4K HD. I can see exactly where the nodes are. I can see exactly where market participants are. This really helps. So that now that we're above the pre-market high, we're going to start to look. So right here is 8 o'clock, 8 o'clock right here. I want to participate long. Where can I get long here? We're above pre-market high. We're assuming the market can go up. I should have stayed in that trade. That's okay. We're fine with that. But in general, where would I like to participate? Well, let's look over here. What I like to look for is I like to look for steep shoulders like that. Steep shoulders. Not shoulders like this, not C-shaped shoulders. I like to look for steep shoulders. So with that in mind, I put in a couple limit right here this morning. Just one actually. But where's the long position? I like the shoulder. I'd probably play off the shoulder and I'd probably keep it decently tight. Decently tight here. Maybe right behind this node here. And if you guys don't know a lot about auction market theory, basically, let's actually just talk about that for 1 second. I did a whole nother video on this and the audio was off, so I had to re-record it. And I'm like, whatever, we'll do a little bit on the live stream. If we were to look at these shoulders here, The lowest nodes are going to be the area of the least activity. So if we were to draw a box here to roughly here, this is where the least amount of activity happened. Let's make this clear. Let's see where the least activity was. And if you see, there's not a lot of, it didn't spend a lot of time in this area, right? As soon as it went through, it went, shoved it up, came down, stayed for maybe a minute and a half, 2 minutes, and bounced right out. Didn't even want to go back in the zone, came in, immediately bounced out. So this area is an area where market participants like you and I, or hedge funds or anybody like that, is saying, when it gets down here, this is a discount, I want to buy immediately. Again, when it's above the market price, at this point, this would have been above the market price, where this low zone is up here, this would be where market makers are saying, or speculators are saying, yeah, when it gets up to here, this is, you're selling at a premium. So this is a great area to sell because the market for the day is considered overvalued for the time. Now, this changes constantly and the sentiment can change. But in the meantime, this is a good idea to visualize where market participants are trading. So in general, this red line is point of control, and this is where most of the volume is transacted. This would be considered your fair value, where buyers and sellers are happy to exchange. And then if it goes down below, buyers are happy to grab, above, sellers are happy to sell. So that's the basic theory, right? And if we draw our little zones here again, let's see here. Draw our little zones here, just help us to visualize some buying and selling. Oops, that's not what we wanted. Buyers and sellers. Go right here. There. Okay, so buyers and sellers in the market. These are the supply, this is the demand. Now, I showed you through price action, but this way is a little bit easier to visualize. Notice we tapped up into that and it shut back down, but in general, this is just easier to visualize. And then when they get taken, that's it. You guys have been overtaken, basically. Or the sentiment has changed. That's a better way to say it. So now let's talk about my positions. We're above the pre-market range. I'm looking to participate long. So I like the sharp shoulders like I was talking about earlier. I like these sharp kind of drop off shoulders here, right? But since we're only looking to participate long, we're going to look for somewhere in here. So this morning, we put in a couple orders right here. The idea that the market, put it right behind this node, that it's going to trade back up to this point of control, which most people say acts like a magnet, which if you trade it for a little while, you'll start to see that that's true. So I put a limit order in here. And again, I'm looking at the charts from this point on at 8 o'clock. Now, it never got to my my TP, but that's okay. This is how we're ordering it. I close my computer. I'm done for the day. That's it. I don't have to worry about it anymore. So with that in mind, we were in a trade, but that was because of a different strategy. And I like the context of this long here. We don't have to get into it, but I like this. And I was looking for a nice little 1-to-1 setup, which we almost got. Just didn't quite get there. Still could. We were close. 7 points off. But in general, yeah. So that is my new strategy. And that's what I'm going to be trying to live stream. We're going to be doing this from 7:30 a.m. We're just going to give a little visualization of the markets. And we're going to put in a trade at 8, and that's it. I'm signing off every day. So hope to see you guys there. I'm going to be talking more about the different theory. And we'll talk a bit about the footprint too, how we know where absorption's going to be and where aggressive buyers are without having to look at the footprint. We can already visualize it in the charts. So in mind, thanks for watching, and I hope you